Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield Anchor reporter Meghan Grebner. With us, as always, to talk all things markets is Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We were laughing. We're back on video and we've resumed our weekly video chats. We both have to remember that you can see us now also. So keep that in mind, just a reminder for you as well as me.
That's right. Hopefully I'll remember for the entire time today, Megan.
All right, to get things started today, kind of a quiet week for reports, so it gives us an opportunity to talk about a few other things. But let's start, as we always do, and recap what happened this week in the markets.
Yeah, if we start on the cattle side, as always, cash-fed cattle lost $1 this week. If we look at those feeder cattle markets this week, they were anywhere from steady to $2 higher. The June live cattle futures contract gained $5, and the August feeder cattle futures contract gained $1.50 this week. As we all know, box beef prices continued their upward march. I show a weekly change in that choice box beef price of nearly $76, and we got gains across the board in all those components of that choice box beef price. On the hog side, barrel and gilt prices up nearly $8 this week on the cash side. That June lean hog futures contract closed up more than $11 this week. Also, the pork cutout value gained substantially this week, up a little more than $21, again, with strength across the board in all the components of that pork cutout value.
I think another interesting thing that we've been talking about really week to week is what's been going on in the processing sector, and kind of reflected more so, I think, in recent weeks in the pricings. We've seen some jumps and some rebounding a little bit this week. But I want to talk about, this is continued. We continue to see massive pressure on processing. And let's talk a little bit about what that means, big picture for both the beef and the cattle market.
Yeah, I think if we start talking about cattle first, so hopefully you can see the slide that I've shared that's got four graphs on it. The black line is current average daily slaughter. It's a 6-day moving average adjusted for holidays and weekends, etc. But you see the slide where we sit, about 70,000 head is where we sit for average daily slaughter. You see the precipitous decline from where we were pre-COVID. I sometimes remind us it was about 105,000 head. A little bit of bump up, I think, as processors begin to see what was coming in terms of potential plant slowdown, shutdowns. But we've certainly moved well below slaughter numbers for a number of the last few years. I will say, as we look at this week, at least here in the last few days, we've gotten a little flattening in terms of average daily slaughter, and maybe that's a win in the situation that we've been in of late. So we'll see whether we get some turnaround next week. The problem is, we're talking about 35-40% decline in slaughter numbers. In terms of the question of, for producers, this is tough. We've still got cattle that aren't being bid on, having trouble finding a place to go. So I think it's tough on producers. I think the consumer impacts likely are a little less pronounced as we go forward. There's a lot of stories out there about food shortages going on. I'm more apt to say at times you may find things that are a lot less full than normal, but we are still slaughtering some cattle and hogs both, and I think that keeps some type of supply sitting there in the grocery store for the foreseeable future. And if we were to recover on the slaughter side next week, I think that helps us as well.
We know that the president invoked the Defense Production Act, which should eventually help alleviate some pressure on the supply chain. And while that makes and requires those facilities to be open, do we still get concerned, though, about the labor issue and in the fact that some employees are still battling the virus and are continuing to be sick?
Yeah, so for sure, I think we're not out of the woods yet, even with the Defense Production Act being executed by the president. Some of the plants that we've seen reopen have had some COVID-19 cases crop up again. So we're not out of the woods. If you look at some of the changes some of these plants have had to make in terms of added social distancing. It's certainly not going to allow chain speeds back or slaughter capacity on a daily basis back to where it was. Some of these plants still only running about 50% capacity when you look at some of that current data. So we're a far cry from being out of the woods. And sometimes I look at the hog side where we were slaughtering 425,000 head a day there back pre-COVID, now setting it more like 255, and we've had some 230 days here early this week. It tells me we've got a lot of hogs backed up. It takes a long time to work through that backlog. If you aren't back to kind of that full tilt in terms of daily slaughter, and again, I don't see that happening here for perhaps a few weeks at the earliest at this point.
I think it's interesting. There was some comments made from Minerva's chief financial officer, somebody in their upper management, talking about how they're looking at this as an opportunity to export more Brazilian beef into the U.S. And while we know the whole global trade picture is all about balance and being able to be a player on the global market, I don't necessarily think that we're going to see more Brazilian beef coming into the U.S. as a result of what's going on here, because I don't think that there's a shortage.
So I tend to agree with you, Megan. I don't think we're going to see a lot of product coming in. And sometimes I remind us, too often we talk about beef as beef. And I go, I think that's not always the correct way to think about it. There are different qualities of beef, different cuts of beef. Consumers in this country might have a preference for some higher quality beef than maybe the Brazilians generally are producing today. So I think all of those things matter. I don't think we're the only country also battling COVID-19 and potentially battling COVID-19 in some of the plants. And so the Brazilians may have high hopes to move a lot more product into the United States, but I think there are a number of things that are going to limit their ability to see a lot of Brazilian beef in the U.S. Here in 2020.
Which for a lot of folks here in the U.S. and a lot of U.S. cattle producers, that's music to their ears.
That's right. And this is always tough, so it makes me go back to my, we all like the definition of free trade where we can export all we want, but we don't want to have to import anything. And I remind us that that's a two-way street. And as much as we might not like to be importing a lot of Brazilian beef into the United States, we have to take those case by case and figuring out what's appropriate fair trade, I guess, is the way I might phrase it. And, that there are going to be folks all over the board in terms of their definition of what fair trade is like. And relative economics will play here. And if prices were to get high enough in the United States relative to Brazil, we might see more product come in. But I think that takes a pretty bad situation unfolding here to talk about prices high enough that a lot of Brazilian beef found its way into the U.S.
Scott, one of the questions I've had as it relates to the processing pressure and what's been going on in our food supply chain is, how long can it take us to climb back up to a slaughter capacity that allows the food supply chain to move the way it should and not have those constraints getting it to the consumer, especially knowing that we've got this backlog of animals, both on the beef and the pork side, that we're going to have to work through?
I wish I had the answer to that question, because I think it's really a critical one that I've stayed focused on. I think, again, we don't recover right away, even though we've now said, hey, we're going to keep these meat processing plants open. And I sometimes like to remind us, I think it's more than processing that's at risk here. Distribution systems generally, those distribution centers have some of the same issues with COVID-19. And so it's going to take, I think, a long time. And frankly, it depends a lot more on new COVID-19 cases in terms of how quickly we recover. If we're going to drag this out and continue to see a lot of new cases coming over the next several weeks, then it may be a while before we get all of this distribution and processing side worked out. If cases are to begin to continue to contract like we're seeing some early signs of in some places in the country, then maybe we can get some recovery occurring a little bit more quickly.
That leads us perfectly into this week's report, which is our Restaurant Performance Index. And I'm not sure there is any sector of the economy right now that is as desperate to see recovery as the restaurant side of things.
Yeah, it's actually interesting to talk about what's not very good news in the Restaurant Performance Index report on the eve of at least some states beginning to open back up on the restaurant side. We look at the March overall Restaurant Performance Index. It came in at 95, down nearly 7 percentage points from the February level. That is the lowest level ever for the overall Restaurant Performance Index. The previous low was in December 2008. We all remember the financial crisis that was happening at that point in time. Same store sales, customer traffic, both down 15 percentage points from February to March. I don't think any of that surprises us in the data that we see there. Even expectations, though, down nearly 4 percentage points from where we were in February. It reminds us that I believe those in the restaurant business are still worried about how quickly some type of recovery happens as we move forward. So it certainly highlights just how tough it's been in the restaurant industry.
Scott, as we talk about and round things out today, let's talk a little bit domestic demand, and I'm going to kind of dovetail that into global demand as well. Jobless claims continue to rise, although not quite as rapidly or as much as we've seen in recent weeks. Do we get some hope that as these stay-at-home restrictions begin to lift, that we start to see more demand at the grocery store, maybe the economy starting to pick back up?
Yeah, so in many ways, I hope we're at the bottom right here. And this is not my area of expertise, but I hope as we move forward that we find ourselves at the worst in terms of the COVID-19 outbreak, and we're starting to see some recovery that can be sustained. That's my hope, because I think it helps us in terms of where we go in agriculture. I guess in terms of what I see happening, I view if restaurants are able to begin to open and those restrictions continue to be loosened over the next several weeks, that we do get, frankly, a fairly strong pull in the short run as a result of that opening up. We're going to have to then, I think, begin to talk about just what kind of drag we have in the general economy. So we might get this pretty nice pop in terms of some stronger demand that might wane or then turn over and talk about some economic news that continues to hurt the ability to consume meat out in restaurants, et cetera. So I think, it's not going to be just everything's great from this point forward. I think we'll see cycles in terms of what it means for ultimately beef and pork producers.
That being said, a big week when we look at the export sales report this week for China specifically. Yeah,
absolutely. If you look at net pork sales, a little more than 50,000 tons, up 27% from the previous week. It's certainly good news. China sitting there with more than 35,000 tons. Mexico 7,200, Japan 3,100. A lot of very good news there, and I think that continues to point to what could be, as we continue through 2020, some stronger prices later in the year. Again, also dependent on are we at the beginning of better news in terms of COVID-19, and if so, a little stronger domestic demand, strong global demand could certainly give us higher, I think, both cattle and hog prices as we wrap 2020. And so maybe there is some positive news ahead, again, if we can continue the recovery that seems to be starting to happen.
Scott, reports for next week before we wrap up today?
Yeah, so we'll get monthly trade data midweek, and we'll finish next week with another interesting jobs report. So those will be the two big ones to be paying attention to.
All right. We look forward to seeing you again next Friday. Have a great weekend.
You do the same.
Thanks, Scott. To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can submit questions and comments there as well. For market updates twice daily, check out John Perkins' Market Minutes, and make sure to check out our webinar series on COVID-19's impact into the ag economy. We've had one focused on pork. We've had one on beef. This coming week, John Perkins will be hosting one talking about grains and ethanol. And then Scott and I'll be back with Daryl Peel and Corbett Wall the following week talking about beef again. All of those are available on our website, brownfieldagnews.com/COVID-19. Have a great weekend. Great to see you all again as well. I'm Meghan Grebner for Brownfield.